All right. Good morning, everybody. Good to see a bunch of you already logged in and ready to go. Welcome to the Hurley Investments Trade Findings and Adjustments of November 4th. What do we want to talk about today? Let's recap some of the things we talked about last week. We talked a lot about leadership and what a good leader is. Strong leader has principles, and he or she sticks to their guns and doesn't keep changing their mind to try and necessarily please people, sticks to their guns. Leader finds a way in hard times. Poor leaders hide and they try and find excuses and blame other people or other things for things not working out. Rather than a good leader, I'll add there, says it how it is. When a plan didn't go the way it was supposed to, it counts for it, and we learn from it and move on. Talked a little bit about that day, which was, if you're looking at a chart, this was the 27th. I guess was the day before, and then that day was the 28th. So there was a little sell-off that day, and a lot of people sold off some very good stocks for no particular reason other than it was falling that day. And how people must have felt dumb the next day when everything went back up. And let's see, we recapped from the week prior. Bank of America and why we were being patient with protecting profits as it was still in bullish pattern. We'll come back to that today. There was also a quote when we were talking about leadership and talking about the market, and where I forgot a quote from Howard Marks that I was trying to get through. I don't have an exact quote, but now I remember what I was going to say, because it was a little embarrassing. I had it on the tip of my tongue and completely lost it and laughed at myself. So coming back to that quote, and the point was, and paraphrasing what Howard Marks talks about quite frequently, that economics and markets are not science. It's basically just probabilities, looking at the past to extrapolate how the future might unfold. It's not pure science like finding cause and effect and measuring outcomes and that sort of thing. It's just extrapolation, and you do the best that you can. So with that, kind of the whole reason why we follow our charts, why we go through fundamentals. It gives us an idea fundamentally what the company is doing and long term, and how they're performing and how they're making money and how they compare with other companies. And we decide, basically, with that knowledge, we decide whether a company is overvalued or undervalued compared to their peers in the market, and whether or not their current stock price is justified or not. If they're undervalued, it means their price and the market itself is not fully appreciating them, and that reflects in their price being low. When we look at charts, we're extrapolating the past in what herd mentality has done, where big institutions have perhaps bought and sold to develop a support or resistance level. It tells us what big institutional traders are looking at with our 50 and 200-day moving averages and the probabilities of support and resistance that those give us, and how stocks move when they cross over to the upside or the downside. And again, it goes back to extrapolating the past for understanding some probabilities. So let me write that quote. I'm sure I've quoted this several times, so you probably heard me say it. It's looking at the past to make let me see. Let's find a better way to say this, because again, it's not an exact quote. Extrapolating to estimate, that's not even a good word, to find probabilities of future outcomes. Howard Marks is kind of the Warren Buffett of bonds. I don't think he's been doing very well since the government keeps buying all the bonds, but maybe he'll turn a corner now that they're tapering a bit. All right, so economics is not a science. We could also say markets, as they are products of economics. It's extrapolating the past to find probabilities of future outcomes. I think that's a pretty good paraphrase. So with that, let's look at a few things. Under Armour, let me refresh this one. Oh darn, they were up earlier. Couldn't get over 27, but man, they're still such a bullish position and a stock that can do extremely well for a Christmas rally. I don't know how I butchered that one. Christmas rally stock. And their earnings was incredible, hence why we see this huge $4 gap there. So I feel like we will have a Christmas rally with this retail stock. The problem is we've protected down low right before earnings, and they've shot up after earnings, and we've not done a great job as it's come up to a high to protect those profits. Kind of the opposite of Bank of America we talked about. So that kind of gives us a question: do we protect near term as it comes off of overbought, try and avoid this situation, and see where we might need to take it off for a continued Christmas rally? So how are we going to learn from our mistakes or from the past and try and figure out a better way to do this? So we're looking for the best time to protect profit as Under Armour comes off of overbought on the RSI. This is the RSI. Those of you newer to what we're doing, this basically just tells us up here if a stock is overbought on the top line or if it falls below the 30 line, if it's oversold. And typically when a stock is overbought, it will consolidate and kind of slow down and go sideways and come off of overbought or fall down, kind of like this did. Usually it doesn't mean that it's going to fall down all the way back before their last earnings. That was kind of stupid. Kind of doesn't seem right. However, we want to try and avoid that this time. So what we'll look at is see this at the end of the day, and maybe if it's tried to fight back positive, we'll wait another day, or just kind of feel that out. We want to make sure we don't protect necessarily a bullish stock when it's in a bullish trend, which it certainly is. However, with past experience with this stock, it tends to rally and then get overbought and then reverse course. And that doesn't mean it will do that this time, but we're just trying to extrapolate the past and come up with some probabilities, right? So for this stock, maybe we'll again try and protect from coming back from overbought, see where it falls to before we might have some good pressure to the upside for Christmas rally. So I thought that was worth going over a little bit. Kind of one that's sore to admit that we didn't seem to do very well protecting on the downside. Kind of got swung out of some profit protecting as it's gotten lower before earnings. A little bit of that is bad luck, but we certainly didn't do a great job protecting profits before it came back down. All right. Going back to Bank of America. We talked about a couple weeks ago, why would we protect a bullish stock? And that kind of is the same thing. With the difference between Bank of America and Under Armour is Under Armour has shown us in the past history why we would protect a bullish stock. Bank of America is different. It's been one of our great winners this year, and even with today, which it's our biggest loser today, unfortunately, day after Fed announcing its tapering, but not really saying much on interest rate hikes. Maybe that's just kind of a reaction for today, but even so, we're still in a bullish trend. Just draw a little line. Not the prettiest line, but you guys get the idea. Still in a bullish trend and kind of sitting at the lower end of that trend. Coming off of overbought. So we'll want to just keep our eyes on that and wait to see if it breaks that trend. Starting to turn over on our MACD. Let me get our, I'll pull it up here on our little quicker moving 5 and 20 day exponential moving averages. Quite a ways from breaking through those, and a little ways from passing this halfway point on our RSI. Once we get those three, we've technically, let me see if I can actually, there we go. Let me try this again. Once we get these three technical crossovers, one on the MACD, once the 5 and 20 crossover, once the RSI crosses over on the 50, we're technically bearish, which means you can see right now we crossed over to the upside, or not right now, but a month and a half ago. All three of these indicate how we're technically bullish from that point. Didn't cross over here, kind of came back, and now we're kind of trying to test the strength of this bullish trend today. So that's where we're at. And guys, I've been kind of mumbling on and talking on. Have there been any thoughts or questions? Let me know. But basically, Bank of America still in a bullish trend, and we'll look to keep our eyes, why don't I just say we'll keep our eyes on it. In case we need to protect profits for a change in trend to the downside. Questions about this? Those two are ones that I wanted to touch on. I mentioned to take profits in some of leap calls that we've had on there. Man, Ford is doing great. Let's just look at Ford real quick. Up at 19. Check out that bullish trend. We're finally seeing Ford do what we thought it would do several years ago. Man, is it so nice. Great for those of us that have stock as well, because we can just hold on to that forever. Costco. What the heck happened to Costco? I said it was a good time to sell Costco, didn't I? So my thought was once it got up to their 500, great time to sell. And it was, and we took an amazing profit. Why are they up so much today? Anyone want to tell me before I go and look it up? Not seeing anything come over. Let's just look it up, why don't we? So basically what happened was everybody this morning was talking about Costco. We had Jim Cramer talking it up and how amazing they are. Where's the news? Basically Costco, because they have deals with the cruise lines, stuff like that, they basically have their own special docks that they get preferential treatment with, and they aren't going to have the supply constraint problems that a lot of other stores and companies are having right now. And because of that, they're just doing incredibly well, and speaks well to their future and their ability to deal with all of the shipping issues, right? So let's see. I was hoping to just see, there we go. I'm in awe of Costco. And apparently we need the Pro for this, so that's lame. Never mind. I was gonna link that for you guys, but don't pay for some of that. Let's see. Why don't we go to FinBiz? Enough of this pay for articles nonsense. FinBiz. See if we can find some more. They reported October sales results as well. Yesterday. Let's see. Let's see what these guys have to say. More talking technicals, which we obviously don't need their help with. Really just want to see more on, yeah, they're not going to help us. Yeah, not giving me really what I wanted, but I basically already told it to you. So they just have situated themselves really nicely. So for shipping and delivery, for e-commerce, everything, it's looking really good. So I wanted to talk about maybe doing, as I kind of sold most all of Costco, had a few of them still left at 450, which are obviously looking awesome. I wanted to look at repositioning and going up to 550 for leap long calls. 550 for January 24, $64. That's kind of expensive, and I don't know that I want to do that. Bear with my computer as we're trying to get this to load. Take off some of these. We just need the January 23s. Give it a second. All right, January 23, 550s, about $20 less. Gives us a little over a year, which I think we would be profitable and out, similar to how our 450s have been. So this is something I'd be looking at. To reposition this, we'd have taken profit. Hopefully you would have done the same with Costco leaps before. Man, we have been trading it from when they were in the 200s, and now it's up at 500. Just kind of unbelievable. But it's a good company. It's just, man, that price is getting so expensive. So this is what I would look at. I don't know, we need to do a snapshot analysis of just a leap call. It's, yeah, numbers aren't even helping us right there. Kind of silly. All right, you guys get the point. You understand. Pretty much just saying stock replacement on Costco, 550 strike, January 23 leap calls. Kind of gets exactly what we want, and gives us the ability to continue to follow a ridiculously bullish moving stock. All right, there we go. Guys, is there any questions? Affected. Haven't been as affected by supply chain constraints as other companies. So grab that. Actually, that's the right one. Yep. And there you go. All right. Are there any thoughts, questions, things you guys would like me to look at? Just leave it down here so you can see everything. This should be another great Christmas rally stock, I would think. Bank of America falling today a little bit. I mean, I mentioned that might be because there weren't the Fed announcement yesterday, there wasn't a rate hike, but Bank of America was up yesterday, and we kind of already knew that was going to be the case, so it's not really a surprise. In other words, it's kind of priced in for Bank of America, and so to have it kind of fall today, that doesn't really tell us why, I guess is what I'm trying to say. But for a few days now, not quite weeks, I don't think. I guess there are weeks. 2 weeks, struggled to get over 48. So gonna keep our eye on that, want to keep some profit there. Guys, are there any other thoughts or questions? I've given you time to type anything in, so I think we're probably good. Good to be with you again this morning, and hope that you have a good weekend. Just some housekeeping. Let me see. For next few weeks, we've got Thursday the 25th. We're not going to be obviously doing a trade findings because that's Thanksgiving. And I'm getting LASIK surgery on next week, so I'll be out on the 11th. So I'll cancel next week the 11th, and we will be back on the 18th. So just so you guys are aware, Kevin said we will be doing a market commentary on the 22nd, that Monday of the Thanksgiving holiday. He will still be having a webinar then, so please come then if you're able to. And other than that, I'll see you on 18th at 10 a.m. for our next trade findings. Guys, have a good weekend. We'll see you and talk to you then. Take care.